Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 23rd of December, comes to you from Fuerteventura in the Canary Islands. I'm here taking a break from winter in UK and avoiding potential lockdowns. So working from here quite happily. I've got good internet and keeping a close eye on the markets. We're seeing here, interestingly, European gas storage levels, and this chart's this is a new data source that Updata's added to its list of data sources. You can just go, you will need to upgrade, but it's in the list of data services for Updata Enterprise Energy clients, and it's the GIE data. So this is the European gas storage levels for each country, and I've put it here. These are all these charts are all overlaid to the same level just to fit the chart, but it shows the shape, and this is Germany in black, France in blue, UK in red, Italy in green, and Spain in gold. And we're seeing here how storage levels are way below the level that they were at the end of last year. So we were around this level here. We're much lower. This has been the big driver, of course, in what's happening with gas prices in Europe. So this data is new in Updata, and we feel a really good addition to watching the energy mix. So let's take a look we'll come back and look at the energy mix in the end. Let's just take a look at markets and macro. We've seen the dollar falling away there on the short-term chart. Remember, this is the weekly, daily, and 60-minute chart, long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. So that means that the euro is actually lower. So we're seeing there, that's quite key on that medium-term chart, but it is higher on the short term. Sterling sitting at 133.78, so we've had a real resurgence there in the sterling over the last couple of days, and so we're higher there. And against the euro, again higher here, 118.24. So sterling coming back towards the top of the range. Gradual appreciation here in sterling versus the euro, and we've got some quite good upside targets: 119.95, 122.74, 120. So looks like sterling will break that 120 level sometime in the coming days and weeks. Looking at Bitcoin, we've fallen back from the $49,500 level, sitting at 48,400. We are medium-term bearish, but long-term bullish. So we still have that big target of $83,000. Bitcoin tends to rally, or cryptocurrencies tend to rally around Christmas, so it'll be interesting to see that. And of course, markets tend to rally too. The well-known Santa rally. Will that materialize with everything we're seeing with COVID? There's reasonably good news out this morning that the Omicron strain is not as deadly as the Delta strain was, even though it's spreading much faster, of course. So markets might take some cheer from that research that's coming out, but we're seeing the S&P 500 getting back into short-term bullish territory. The futures flat this morning, so both the S&P future is up slightly, the Nasdaq future is down slightly. So it looks like markets will open flat. The VIX volatility back below the 20 level, so the fear index is back under control. FTSE future up 0.3% in the UK. The DAX in Germany up 0.3% as well. CAC Qantas relatively flat. Japan was up nearly 1%, so that's looking quite strong on that short-term chart, but still has really struggled this last few months here. We've just sort of hit the buffers. Looking at Hong Kong, Hong Kong's had a torrid year. We see here from the highs that we're in February, we've fallen all the way back from 30,000 to 22,000 on the Hang Seng. Chinese property shares, of course, weighing heavily, including Evergrande, which is listed in Hong Kong. The Chinese market itself has actually fared better, sideways. We do have these big upside targets, so China might well jump and run next year. Will be very interesting to see that. That is a fairly bullish consolidation pattern, ripe for a breakout. The Sensex in India up 0.5%, still looks strong long term, medium term, just finding support on the cloud. And the Aussie market up 0.3% as well. We'll look at the energy mix in a minute. Looking at some of the softs, we've got wheat up 0.2%. Still looks set to go much higher next year with these big targets and that really strong trend, finding cloud support there, bullish on all three time frames. Corn is up 0.5%, not quite as bullish as the wheat chart, but is emerging into bullish territory, and again bullish on all three time frames. And gold is looking pretty strong, back above the $1,800 level. That's the critical level for gold, getting it back above that $1,800. Good if we could break this 1930 high that we saw in 2021. And of course, the 2070 high that we saw in 2020. Gold may well have a better year next year. Silver also up slightly. Palladium hasn't had a very good year, down 0.93% again. On the short-term chart, we're holding on palladium, but the trend has been pretty bad over the medium to long term. US 10-year yields sitting at 1.47%, bullish on the short term. So bullish yields means bearish bonds, of course. So bond market is just weaker with these yield charts all in positive territory. We've had a few false dawns. We've got upside targets still into the 170, 180 level. But of course, we need to break that previous 170 level to get there. We've had a few targets come on the chart and come off, and we've got downside targets. Still a lot of uncertainty surrounding inflation. Now, looking at the energy mix, it's quite a screen of red this morning. And in fact, we went out to clients first thing at the open, bearish on gas. So be interesting to see there. So we've see Brent crude is actually struggling a little bit, hitting this resistance level. We were neutral today because of that. And the same with WTI, very much stuck between this sort of 65, 85 level and the bigger level. 73 is the level that we're looking for a break for bullish, and 66 is the level that we're looking to hold. We were actually bearish. We were neutral on US gas. It just for the moment looks like we're just fighting on this support level, but this is still medium-term bearish, and we do have this downside target here. Coal sitting at 128, still needs to break this 133, 134 level to get to a higher high. That's our main concern on coal. If we break below the $100 mark, then we would be bearish. Emissions, we went out as bearish today to clients, and that was in our report first thing. If you'd like a trial of the reports, let me know if you're an energy client. We've got these downside targets hanging over us. So we did put out a post on LinkedIn saying that we see emissions stuck in the 70s. And of course, we did put out a report to clients on how far we think emissions could fall back to. But for the moment, that is really the move, then the lower high, lower low, and looks like we're heading for a lower low again. These downside targets are the thing to watch. We talked about gas markets. We were bearish today, and there we go. We've got targets to the downside. NBP downside is again, so that's quite key. And if we look at German power, we're lower here. We said below 300 we were bearish today. We're right on 300 euros at the moment. So that's the level to watch. So that's key. But we're seeing energy markets having a real setback today as we run into Christmas. That's it for today. I won't be doing charts today. Tomorrow I will put out the report, but with the market half day, and then Monday and Tuesday next week are closed with the Christmas Day and Boxing Day being on the weekend. So markets are closed mostly on Monday and Tuesday next week. So I'll be covering them again on Wednesday. Have a great Christmas, and look forward to seeing you before the new year next week. That's it for now. Bye for now.